this is great. I'm so excited to be here today. This is, eSeries is very near and dear to my heart, and as a board member, I mean, this program is just something special and unique and magical, and is not replicated across Canada anywhere. So we're just so excited to have you all here and be part of this program. And hopefully Aman and I deliver on the financial part of it. Numbers, everybody loves numbers. They're so exciting. Woo, numbers! Numbers, everybody! Yeah, not really. I can see it. Not really, right? No. I'm not a typical accountant. You're going to get to know that as we move along. But I'm a partner at KPMG. I work in our enterprise group, which is clearly solely focused on private companies from startup all the way up to large organizations. Primarily, our goal in the enterprise practice is to help make our clients' businesses better. And whatever that is, it's different for every client and it's different for every size of business, but we're here to help. And Aman, I'll let you do a brief introduction and then I'll set us up for what we're trying to accomplish today.
Yeah, so as Larkin mentioned, this is my third year presenting and always enjoy coming out and look forward to this event, to seeing everyone's passion about their business and looking to learn from this event and move forward. I've been with KPMG for a number of years and work closely with Brandi, providing year-end services, audit, tax, and advisory services. I enjoy working with growing companies that you're able to provide advice and help them in growth and provide insights from other companies that you're working with. So definitely find that very rewarding and enjoy working with companies that are moving forward and trying to expand and move into new markets.
Perfect. So today, what's the goal of today? Our goal is what I have found and what I have seen with all the work that we've done with entrepreneurs is that often entrepreneurs are either terrified of numbers, maybe don't necessarily understand them, but what it is, it's an incredibly important part of your business, and it's something that what we're here today is to try and give you a better understanding of what your financial statements are supposed to be telling you, the story. It's a story. It's like reading a novel is what it is. It's reading a book. It's telling you something about your business. And these are supposed to be helping you make decisions and help you make better decisions within your business.
So first off, what are the different types of accountants out there? You have a bookkeeper, an internal accountant, and there's accounting firms, generally 3 buckets. So first off, a bookkeeper is someone that manages your day-to-day transactions, the recording, your day-to-day entries, hopefully producing monthly financial statements for you to take a look at, and at the year end, they provide the statements to your accounting firm so that they can produce your financial statements and tax returns. And really the question is, do you want someone in-house, or is there an outside firm that you can use that on a consulting basis can produce those statements? If you're at a stage where you want someone in-house, it's definitely tough to find. I've tried to help a number of clients try and find bookkeepers to bring in-house, and it's tough to find someone with the skill set that's going to be there long-term as well. Yeah. So I mean, for them, I usually recommend Craigslist and posting online to see if they can find anyone. I mean, the quality of candidates sometimes isn't the greatest, but on occasion you're able to luck out and find someone that has a couple years of experience and is a good fit for your company.
And just one thing to think about when you are hiring a bookkeeper is, what do you want to see? That's the important thing, and I don't think you all necessarily know exactly what you want to see. And if you don't know what you want to see and what you want them to produce, it's difficult to try and figure out whether they're going to be able to do that for you. So I think it's trying to understand, okay, look, I want to, if you're a business that has inventory and you want to have inventory management, and you want them to help you produce inventory reports so you know what you've got and how quickly it's turning, and buying decisions, you're going to need somebody that can come in and produce that type of information for you. If you're a service-based business, you're going to want to, be able to understand, okay, am I billing out at the right rates? Like, am I recovering all my time plus covering all my other costs in my business? So there's certain things you got to think about as to what you want to see, and then you can turn around and say, okay, well, can this person do that for me?
A couple of the points that Brandi mentioned would be kind of an internal accountant would offer some of those items. So where they're going in there, producing reports to help you make some of those purchasing decisions, buying decisions, rate decisions. So an internal accountant is kind of a step up from a bookkeeper. Their purpose is to provide more insights into your business, kind of analyze the financial statement information for you so that you can make various decisions, versus a bookkeeper is kind of the day-to-day, make sure everything's on track. The internal consultant would be more of someone to help you make decisions so that you can see if you're charging out the right rates, what your margins are, how often you're turning your inventory. And an internal accountant would be great to produce a forward-looking cash flow statement for you. So where am I going to be in the next 3 months? It sounds like a lot of your contracts or a lot of your sales are based off of contracts, or you're booking out in advance, so you have somewhat of an idea of where your sales are going to be over the next 3 months, and they can produce a report to say, this is what my cash inflow is going to be, this is what my cash outflow is going to be. Can I pay myself? Can I pay my employees? Do I need to cut certain expenses if I'm off track of where I want to be?
I think this is probably one of the areas that is probably one of the most important critical parts for you to manage your business is a forward cash flow statement. Because one, I'm going to hazard a guess, but you're either not paying yourself or you're not paying yourself nearly enough. So it's trying to figure out what those cash needs are, and it will tell you something. Like if you forecast out where your cash inflows and outflows are going to be, and you're in a negative cash flow position, well, one, you have to think about, well, why? So do I need to start making some different decisions? Are my prices right? And sometimes market drives prices, but have you made the right pricing decisions? When you are setting up your pricing decisions, are you making them in a way that you're not thinking about your rent, you're not thinking about your insurance, you're not thinking about your overheads? You're just thinking, okay, this is how much this product costs me, and then I'm going to sell it for this, and I have this margin. Well, that's great, but what about all your other costs? So the forward-looking, the cash flow statement is so important for you guys, and it also is for managing kind of, when you go to a bank, if you're eventually going to need some financing as you grow, you got to be able to know where your cash is going to be to able to borrow the money, or to go to the banks and say, or to go to a BDC, or to go to a women's enterprise center and say, I need a $50,000 loan.
There's different types of accounting firms. There's small accounting firms, large accounting firms. So small firms are generally a partner or two that have gone off and started a small partnership, and they produce your financial statements and tax returns each year. You probably see them a couple times a year, and they do that. Large firms have more resources in-house. They might have specialized departments to take care of US tax, GST, various other components. They have the resources to be a little more specialized and have the people that have in-depth knowledge around certain areas. So we get the question a lot of times, when should I change my accounting firm? And it really depends on your situation. I mean, lots of people have long-term relationships with their accountants, so you can do it on a project basis. If you're expanding to the US and you want to structure that and figure out what that takes, you might siphon off one portion of that, or at the same time, reconsider your service provider at that time. I signed a new contract, I'm moving into the US, there's some growth in my business, it's time to go with a larger service provider that can take care of all of my needs in one place versus having multiple different people being involved. So a balance sheet, what is it? So a balance sheet is a summary of your assets, liabilities, and equity on a particular date. So on December 31st, how much cash do I have? What are my accounts receivable? What is my retained earnings? Retained earnings is really an accumulation of all the profits and losses you have over the years, and represents the equity in your business. How much in assets do I have employed to generate a certain amount of income? What's my return on assets can be calculated from here. Who do you owe money to? Is there debt upcoming that's due in the next year? What are my accounts payable? Are my assets greater than my accounts payable? Will I be able to service my liabilities that are coming up in the next fiscal year? So these are all questions and answers that can be derived from your balance sheet. Next off, we have the income statement, probably the statement that everyone looks at the most to see what their margin is, what their bottom line is. So how did your business do in a year? So this is generally for a 12-month period. You can get it monthly or whatever data set you want. How much did you sell? What was your volume? You can determine what your charge-out rates were. What were your costs that incurred to generate those sales? What was my advertising, marketing? What was my direct cost? Does everyone know what gross margin is? Yeah. So what was my gross margin? Everyone's always interested in that. That's the key one because you want to make sure that your gross margin is high enough that you're covering off your general and selling costs, and that you have something left over at the end of the day to pay yourselves and for the bottom line there. And then whatever is left in your bottom line gets transitioned to your retained earnings, which flows over to your balance sheet. Each year, on the first day of the year, it zeroes out. So you're starting from scratch on January 1st for the next fiscal year. So every year that will get zeroed out, and you'll start all over and hopefully have a better year than the previous year.
And that net impact is your net income or loss for the year then goes into your retained earnings on your balance sheet. So your balance sheet goes on and on and on for eternity. But your income statement is your yearly report card. So your income statement is for the year. The net impact of that goes into your balance sheet, and you start fresh on your income statement the next year. But your balance sheet is just it keeps going and going and going and going like the Energizer Bunny. It is also very important for you to be looking at more than one period, because you want to be comparing how well you've done period over period. Do you want it to be able to see whether you're growing, whether you're shrinking, because it's trends. And what you need to be looking at in your income statement is over time, are you trending in the right direction? Look at your gross margin percentages. You want to look at those, if you are running these monthly, great. If you're not, quarterly, if not yearly. But over the last couple of years, what have your margins done? Have they gone up? Have they gone down? And then you have to what you do with that information is dig deeper, because it's not going to tell you why. It's only going to tell you that you either have an issue or you have a problem or you're doing great. Your margins are going up. So you need to look at your income statement and compare it to period.
Next off, we have the cash flow statement, which is probably the most important statement on there. It tells you a story about what happened during the year. You don't even need to look at the balance sheet and the income statement if you have the cash flow and know how to read it. So cash flow from operations is a key metric on the cash flow statement. If you're going to a bank, this is what they're looking at to see if you can sustain their debt, make payments on their debt. Are you generating positive income from your day-to-day operations? Or is your cash positive because you've taken on new loans from family, friends, the bank? So the cash flow statement, you have cash flow from operations, which tells you what happened during the year in your core business. Cash flow from investing is, did you reinvest in your business? If you're a manufacturing facility, did you reinvest in your capital assets? Are you sustaining that so that 5 years down the road, you're not going to have to make a huge investment? And then cash flow from financing is, did your business take on new debt from the year? Did you repay debt in the year? And various other parts to it as well. But those are kind of the three main parts, with cash flow from operations being the most important portion of the statement. And then this explains exactly what happened in your balance sheet with the movements that happened year over year. And then the operations part is what happened in your income statement, essentially.
That one line, cash flow from operations, is going to tell a bank whether you're generating positive cash flows from your business so that you can service debt, period. And if it's negative, then it's telling them that you're not generating money from your business. You're not generating cash out of your business. And it should also tell you, if you're not, why are you doing this? And there's going to be years where it's up and years where it's down, and there's timing differences, but it's a really important statement, and it isn't something that Aman and I can teach you how to do today. These statements are you need an accountant to help you prepare this statement. And it's not to be confused with a cash flow forward-looking forecast. Completely different. This is telling you how you did last year, at this point in time, what happened in your business. But a cash flow forecast is what you're doing over the next 3 to 6 months. And they're different.
So how can the financial statements help you in running your day-to-day business? They should be a decision-making tool that can help you maximize cash flow. At the end of the day, cash is king. Everyone wants their bank account to be higher at the end of the year than it was at the start of the year. So the financial statement should help you be able to plan ahead for your needs, what's going to occur during the year, help you manage your inventory, which directly affects how much cash you have, how much cash is tied up in inventory. Are your margins high enough to cover your costs? Do you need to reevaluate your pricing decisions? And have you considered all of your costs? It also allows you to review your expenses on a regular basis. Is my salary as a percentage of revenue the same as it was last year? Has it increased, decreased? Why? Is my marketing, other general costs as a percentage of revenue the same or different from prior years? And why has that changed? You want to be able to manage those costs so that it doesn't erode your gross margin that you've generated. And the cash flow, as we've talked about, are you spending more than you're generating? What's your cash position? Do I need an injection of cash in order to meet my needs? Can I pay myself a little bit extra this year because I've generated more cash than I have in the past? So all items that your financial statements should be able to help you do is determine some of these considerations and help you make decisions around them. What are banks, potential investors looking for? We touched a bit on the current ratio, which is your current assets divided by your current liabilities. This allows everyone to know, do I have enough cash, accounts receivable, inventory on hand in order to meet my upcoming liabilities that are going to be due within the next 12 months? Or do I need to take action in order to be able to finance that accounts payable or loan that's upcoming? Debt to net worth, this is a common ratio on that banks provide on bank covenants. Will I be able to service my bank debt? Am I generating enough income from my business to service both the interest and principal portion of my bank debt, and then cash flow from operations, as we just touched upon, which ties directly into the debt to net worth calculation. Key takeaways. Everyone's busy running their business. We want you guys to have an opportunity to step back, spend some time on your business, on the strategic considerations versus running the day-to-day. If I was to carve out 30 minutes a month on my financial statements for my business, what would I do? I'd take a look at my month-to-month financial statements. What changed? What happened in a month? Is it based on what I was expecting? Did I incur something, an expense this month that I'm gonna have to keep in mind for down the road so I can make sure that I'm meeting payroll and being able to pay everyone? Look ahead. We talked about the importance of a forward-looking cash flow statement. Again, it's all about cash. Will I be able to pay myself down the road? Will I be able to pay my suppliers, my employees? You can set something up where you have red indicators and green indicators, so you know if you're in a positive position or you need to look into something a little bit further to help mitigate some potential risks that might be there. So once you get this set up, it shouldn't take a ton of time each month. And then we keep on coming back to cash flow, but managing cash is key, just to, again, make sure that you have everything on hand, you're able to pay yourself, pay your suppliers, pay your employees, and not have any issues there.
And thank you, Aman and Brandi, glad to step up.
Thanks a lot, guys.